let's talk about Rent the Runway. Another IPO following, Warby Parker, a bunch of other folks doing IPOs. What are your thoughts on Rent the Runway? Welcome to the Remarkable Retail Podcast, Season 3, Episode 11. This one's going to 11, Steve.
Ooh.
I'm Michael LeBlanc.
And I'm Steve Dennis. Well, number one, I do think there's this IPO boom, companies rushing to the markets, I guess because the valuations are so frothy, and a number of these businesses have certainly been around for a while, and some of their investors, I'm sure, are looking to take some money off the table. So Rent the Runway, which is one of the more, I guess, high profile disruptor brands, just filed, and I'm going to be like a broken record on this. The thing that has really struck me with these IPOs is these businesses are much smaller than I assumed they were. Rent the Runway doesn't even do a couple $100 million a year in total revenue, which is, kind of the sales of one really good department store. Like that's not a massive business. The really interesting thing is how much money they lose. They lost more money last year than they made in revenue, which is pretty impressive. I mean, a negative, 115% operating margin. Now, again, the argument is always you got to make these investments. And certainly compared to Warby Parker, they were they're in the fashion business. They're in much more of the special event, wear to work kind of clothing. So they absolutely got hit hard by COVID. So it's a little bit hard to extrapolate from their last 5-6 quarters of business what this is going to look like. But as an investment, I mean, you wouldn't normally go to market with a negative sales trajectory, basically, and mounting losses. And our buddy Dan McCarthy, maybe we'll put the link in the show notes. Our buddy Dan McCarthy took a look at some of their churn rates, and they didn't look super healthy. So it's interesting timing for a business where the fundamentals either are very hard to understand or they don't look good. So it's just a parade of these brands going to market. I keep calling it profitless prosperity, right? Like, everybody's so excited. Look at these great brands. And then you look under the covers and it's like, well, they're basically lighting a big pile of cash on fire every month. So we'll see. We'll see how this goes. I suspect this is going to be a more challenging one than the Warby deal.
Yeah. I don't know. It's interesting because the this idea of a story stock versus a performance stock, right? And rent, the whole resale rent economy piece has got a big tailwind just from a notional cultural perspective.
Sure,
and
absolutely.
Boy, as you said, you look at the numbers. It's not a performance stock. Let's just put it that way.
No.
Right. It is a story stock. The story is the bet that resale and rent will be bigger than fast fashion in 10 years, as they say.
And they're clearly, to their credit, they're clearly the leader. They've I think developed a pretty well-known brand, and they've been at this a while. So in terms of building the infrastructure, making some adjustments to their business model, they had opened some stores or showrooms, I guess you'd say. They've closed those. I suspect they may get back into that. That may be some of the reason they're trying to raise this money. So, there's some interesting things there for sure. I don't mean to dump all over it, but this pattern of these brands that seem like they're just killing it, both from a revenue side and kind of share a market, they're still pretty tiny businesses.
Yeah. Well, it adds to another part of this rich retail palette that we get to discuss.
The rich tapestry.
Never a dull day. The rich tapestry, exactly. Never a dull day. All right, well, let's get on with the rest of the show. The back half of the show, we got Robbie Kelman-Baxter talking about subscriptions, and it's a wonderful interview, so let's have a listen.